You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday. It is the 6th day of August, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day, and you'll have access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from the desktop, not to worry, point any internet connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast on YouTube, on Facebook, and Twitter. The other 22 hours of the day and weekends, for streaming the gospel to the four corners of the universe since April of 2005. Let's open with a word of prayer. Father, we thank you for all of your blessings in our life. We thank you for your mercy and for your grace. Our prayer today, God, is that you would make each and every one of us an instrument of your peace, the peace that surpasses all understanding. Where there is hatred, let us show love. Where there is injury, pardon. Where there is doubt, faith. Where there is despair, hope. Where there is darkness, light, and where there is sadness, joy. Father, grant that we may not so much seek to be consoled as to console, not so much to be understood as to understand, not so much to be loved as to love. For it is in giving that we receive. It is in pardoning that we are pardoned. It is in dying that we awake to eternal life. In Jesus' name we pray. Amen. Okay, happy Thursday. Markets are still stuck in that area. We'll take a look at it on the chart here in a bit. For now, let me give you the numbers from around the world. Cash markets, the indices as they're called. We'll start here in the U.S. Currently the Dow up just 20 points. NASDAQ up 8. S&P 500 down 2. And the Russell 2000 down 6.5. Anytime you have the Dow on one side of the street and the S&P on the other side of the street, you have to wonder which one has it right, because by the end of the session, they'll be on the same side of the street. 9.9 times out of 10. Okay, so obviously no movers, no shakers there. In the commodity basket, crude oil is up 13 cents, trading 42.32 last. And gold, here we go again, up $18.50, trading 2,067.80 last, gain of almost 1%. Silver up $1.29. Let me remind you that if you're trading futures, a $1 move in the price of silver is worth $5,000 per contract traded. So silver up $1.29, trading 28.18 last. You heard it, 28.18 last. Now, just earlier this year, April, I believe it was, silver was trading $14. It's doubled. And it looks like there's much more to come. Silver trading 28.18, which is a gain on the day of almost 5%. In the Asian markets at the close, Nikkei down 96 points, Shanghai up 8 points, the Hang Seng down 171. No movers, no shakers there. In the European markets at the close, FTSE down 77 points, DAX down 68, CAC down 48. So for the FTSE, that's a drop of 1.25%. For the CAC, it's a drop of almost 1%. Now that gives us a quiet, mixed day in Asia, and a fairly quiet red day in the European markets. Here at home, it's a mixed session so far. We've got the Dow and the NQ in the green, just barely. We got the S&P and the Russell in the red, but again, just barely. And on the daily chart of the S&P 500, last time I looked, we were printing doji. So we'll take a look at the charts. Today is Thursday, which is Dr. Tom Day. So he'll be joining us at the top of the hour, 1 p.m. Eastern. For now, let's go to Michael, get a recap of what happened in the live training room this morning. When he's finished, I'll be back and we'll look at the Concierge Trade Alerts, the logic alerts in this sideways market. Not a lot happening, but we'll take a walk through them just as we do each and every day. Michael, I can see your charts, so if you're ready, you can take it away.
All right, I'm ready to go. Here we go. Good afternoon, everyone. Today is Thursday, the 6th day of August, 2020. Now, it's Thursday. That means we have a partners meeting tonight. If you are not a partner and you want to become a partner and get into the partners meeting tonight, you got to do it before 9 p.m. If you don't know how, send us an email at support@cfrn.net. Just put partner info in the header. Okay. Now, if you have not taken the free trial and you want to take the free trial, go to the homepage here at CFRN.net. It says free 5-day trial. Click on that. It's going to bring you to this page, eminitrainingschool.com. Okay. eminitrainingschool.com. And on this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link. Okay. We don't know that you took the free trial until you click that confirmation link. All right. Today, when I get into the charts, the first 30 minutes I missed this morning. Oddly, I was late this morning. I mean, like significantly late. And that's not normal for me. But as I said, today is the 6th day of August, 2020. We made 20 ticks in the euro. I'm sorry, 2 ticks in the euro, 1 tick in crude, 26 ticks in gold, and 1 tick on the ES. That put us at plus 295 on the morning session. Today, granted, I was 37 minutes late, but I'm still going to count it as from the open. 57 minutes and 1 trade to get to the goal for the day. At that point, we were up $100 a contract, and we took a total of 7 trades. On the month now, we're at 1,553. That's over 4 trading days, averaging $388 per day. And so we are now at 120 consecutive days of getting the goal for the day. On the year, $54,864. That's over 144 trading days, averaging $381 per contract per trading day. Okay. Now, let's get into everything that happened when I wasn't there. Valerie and Dwayne were guiding the ship. Okay. So right here at 9:30, there was an opportunity to get your goal for the day in the very first minute. Then we had red on the YBR, bearish separation, down close, another short. This one we had red on the YBR, but we didn't really have the separation. The cycle was going up way too steep, so I wouldn't have done anything there. This one we had red on the YBR and bearish separation, so you could have taken that, possibly. As far as our regular trade setups go, we had that one right there, right at the open. And then the slingshot just got all messed up. And it turned around right here 11 minutes later. 11 minutes later, it turned around and you had an opportunity on the long side right there. Now, the slingshot's not letting you do anything right here. You see all this down here. It doesn't matter what price is doing. It's not going to let you do anything. Following the rules. Just following the rules. There was a long opportunity right here. It would have been a break-even trade. A short right there. And another short right there. And right about here is where I actually got in, I think. No, anyway, there was red on the YBR, bearish separation, cycle going straight down with a down close. That was a perfect YBR trade. It was also, well, actually, I would have said no on the bounce off the BBC because we didn't have a lower swing here, and we should have. But yeah, when you get the deeper pullback to the YBR like that, and you get a YBR trade when the cycle is red and going down, and you have this really bearish separation, that's a perfect trade right there. Followed up by another one right there. And doing the trade setups that we do in the room in the morning, there was an opportunity to short right there. And yeah, would have been right here. Nothing there. Nothing there. You know, you got to follow the slingshot. And then I finally jumped in and started doing stuff. Well, there was red on the YBR, bearish separation and down close. Would have been a break-even trade right here. But this was my first trade. I picked up 10 ticks on the first trade, 5 ticks on the second trade, 10 ticks on the third trade. And you can see I was drawing trend lines everywhere, but we just weren't getting the trade setups in the morning session. There was one right here that I missed. Would have been a nice one. And then we started getting in toward the end of the day. There was one more trade that I took where I got 1 tick. I don't know where it is exactly. But there was one more trade that I ended up getting 1 tick on to put us at plus 26 on the morning. Okay, now during the break, let's see here, during the break. There was a long trade right in here. I had blue on the YBR with an up close and bullish separation, so there was a long trade there for the YBR trade. And we had a short right here for the YBR trade, right there. And again, there. Okay, for the trades that we do in the training room in the morning, there was a short trade right here. Okay, and a long trade right here. And that was pretty much it. But gold lately has been my favorite lately. I'm sorry, crude oil. You disappointed me today. And yesterday. And the day before that. But anyway, on the euro. There was some good movement during the break on the euro. And in the first half hour, there was some really good movement on the euro. All right, so right here at 9:30, you begin the market and you get an up close there. That was long. That was a long. That was a long. That was a long. Then it turned around and that was a short. That was a short. And in here, we had a short, another short, a long. We took this one. We got 1 tick, 2 ticks. We missed the follow-up, which would have been break even. And then during the break, let's see, we bounced off the BBC right here. And we had a long there, and a long there, and a long there. And that was pretty much it. It's looking like it wants to go short and retrace some of this right now, and it probably will. Okay. On the crude, we had 1 trade right there. We got 1 tick on. We had one here that we missed. I don't know what's going on with crude lately. You know, the YBR right here, red on the YBR, bearish separation, down close. We had a nice trade right there. Blue on the YBR, up close, bullish separation, break even trade. But this business right here, I don't know what's going on with that. What was my number? 4157 is what I had said. Let me go see how close we got to that. We got down below it. Yeah, 4157 is what I said. And today is Thursday, so that was yesterday on the 4th. Still looking. It's going to get back to that number. Okay. On the ES, we only took one trade today. Let me back it out so you can see what a mess it was. Now, in the first half an hour, again today, I was unusually late, but we had red there and a down close with bearish separation. Same thing right there. So you had an opportunity using the YBR to go short right there. Over here, nothing. Over here, blue on the YBR, bullish separation, up close. There were a couple of trades right here. Now, doing the trade setups that we do in the morning session, you would have gone long. We had to establish a trend in this first period right here. This first 20 minutes was all chop. We didn't have a trend until we got right here. And so the first trade using the trade setups that we do in the morning was right there. And then we get back to the YBR trades. And then I came in, right in here. There was a shorting opportunity there, a shorting opportunity there, a shorting opportunity there, and a long right here that we took. And this actually coincided with a YBR long, but the YBR would have gotten us in a bar earlier, so we'd had more profit in that. Right here, we had a YBR short. Actually, both of these were YBR shorts. Now, if you got in the first one and you took a little profit or bumped your stop to break even, there was the second one right here that you could have gotten into. Okay, and it started bouncing around all over the place. There was one there, one there. Using the trade setups that we do in the room, though, you know, you got to have a trend. And so you would not have done anything throughout this period right here. You would not have done anything. All right. Yeah, and so that's what the morning was like. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 6th day of August, 2020. Made 2 ticks in the euro, 1 tick in crude, 26 ticks in gold, and 1 tick on the ES. It put us at plus 295 on the morning session. And today, it took 57 minutes and 1 trade for me to get to my goal for the day. At that point, I was up $100 a contract, and I took a total of 7 trades. So on the month now, we're at $1,553. That's over 4 trading days, averaging $388 per contract per day. And you can't see this whole thing. Number of days I did not hit the goal since I did not hit the goal. So we're at 120 right now. And on the year now, we're at 54,864. That's over 144 trading days, averaging $381 per contract per trading day. Okay. Now, if you have not taken the free trial and you want to take the free trial, go to the homepage at CFRN.net And right here it says free 5-day trial. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, you read all the stuff. We kind of condensed the 2,000 pages that we have on the CFRN.net into just one simple, easy to read thing. On this page, all I ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial. Okay, and that's a wrap. Dwayne? Oh, well, now I can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Now, Dwayne, if you are ready.
Yep, I'm ready.
Okay, good.
Okay, recap of the recap.
Oh, today, 57 minutes, one trade, $100 a contract.
Good job.
Thank you.
Tomorrow, guys, we got some news, high impact stuff, 8:30 a.m. Eastern. We've got non-farm payrolls. That's a big one. And we got the unemployment rate. Canada puts theirs out at the same time. They label that as a high impact, but I've never seen any standalone high impact Canadian economic event. I've never seen it rock the boat too much, but you never know. But now you do know. So, okay. Let's start out with Logic 247. So far this week, we're in week 105. Last week was week 104. And the recap for the entire week last week. And the week starts Sunday night at 6 p.m. Eastern and runs through Friday afternoon at 5 p.m. Eastern. Futures markets trade around the clock. So for the entire week, we issued 119 alerts, 23 never triggered. We ended up with 90 actionable alerts. Out of those 90, 13 got stopped out. 14% of actionable alerts stopped out based on not risking more than $300 per contract, per trade, less when possible. That's not a typical number, though. A typical number would be 20%. Now, that was, again, last week, so this is where we were Monday at the beginning of the show. Tuesday, Wednesday, today's Thursday. Did I lose a day? Let's try that again. Last week, Monday, Tuesday, Wednesday. Pretty simple, it says Wednesday right on it. Thursday. Thank you for that, Val. Now I'll always know what day it is because it says it right there. All right, as of 12:20 today, just about 20 minutes ago, 76 total alerts issued. Now, these are the ones that come out live in real time around the clock based on current price action. Live in real time, 24/7. Could be 2 a.m., could be 2 p.m. It's just whenever opportunity presents itself. The other alerts, which we'll take a look at in a moment, the Concierge, those are delivered as a static report, and I'll show it to you in just a second. So 76 alerts on Sunday night at 6 p.m. Eastern. 11 never triggered, still waiting on 6 to trigger. You know, we have a cutoff point where we just stop waiting and label them as never triggered. So we've had 59 actionable alerts. 11 stopped out. That's 19% of the actionable, and that is more of a typical number. We've averaged 20% over the last 105 weeks. Okay. Now, the Logic 247 alerts, I'm sorry, the Concierge Trade Alerts, which are based on previous price action, those come out like this Got about last night, right after the Globex opened, 6:10 p.m. Eastern. And these numbers are good for the entire session. We often see multiple triggers at the same price. One alert, multiple triggers. Sometimes twice, 3 times, 4 times, 5. Now, if this week has not gone well for you, if you've had difficulty trading the last few days, if it seems like everything you ever learned doesn't work, don't use that term, but if that's how it feels, stop kicking yourself, because it's not your fault. Well, I guess that's a topic for another show. But the market conditions that we've been presented with these last couple days, and I'm going to show you on the chart right here. Okay, so you had a chance to get a screenshot of those. We'll go through them. Okay. Now, this is all scrunched up. Let's look at a 30-minute for a second. This rectangle that we drew, I think yesterday during the show or before the show. Anyway, we started at 3 a.m. August 5th, yesterday. And all this does is just highlight the range that we're in. Now, we popped out of it here and here, and once I drew it, I didn't change the size. So probably when I started out with a smaller rectangle, which I stretched over this morning, I didn't adjust it and move it down. I want us to be able to see the range, and because this is where price action was concentrated. But we popped out here and here and here, and each time that it happens, it looks like, you know, maybe something's going to happen. Not so much this one, because when you have a big red candle come down and hit the BBC, that's what you expect. You anticipate price bouncing, and that's what it did, which took us up to the weekly trading zone. We missed hitting it by a couple ticks. Reminder, weekly trading zones are an area, just like fibs. It's an area. So from the top of the range, it came back to the BBC, back to the top of the range, back to the BBC. This time it really looked like something big was going to happen. And you know what? Something big did happen right there. This is the daily chart. This is Friday, February the 21st. This is Sunday night, February the 24th. Many of you were in the channel when this happened that night. Gap never filled. The high of that candle was 3,300. The low of that candle was 33.27 and a quarter. The closing price was 33.38 and a half. And during this session, we've hit 33.29 and a quarter. We've made it through this obstacle. Took a lot of attempts to get through that obstacle. We broke through it, and then we ran into this obstacle, which sent us back to the BBC, where we found support. And support sent us back up. This time, it only took about 3 sessions. We got through this area. We're about halfway through the window of opportunity that we drew, I don't know, last week or something. Today's high, we were just about halfway through. Once we get through this area, the next important area for potential resistance is going to be this all-time historic high. This was an all-time historic high. And there is a gap here, but that's long since closed. See that? That must have been a Sunday night as well, 24th to the 27th. Yep. You can spot those Sunday nights because that's about the only time you see gaps. In earnings seasons, sometimes you'll see a small one. Okay. So this candle today has been red, this daily candle. Let me open it up. It's been red, it's been green. It's been red, it's been green. Doji. Dojis are often turning points. Okay, this doesn't look very dramatic. You won't have a long wick to the upside. We don't know how this candle will close today. If it closes green, if it can close above the high of yesterday, that would be bullish. That would lend credence to the idea that we'll continue higher, at least up into this area. And the top of this window, by the way, that's an area. The bottom was 3303 and the top 3355. And we're at that midpoint. Okay. So the 30-minute chart. While the daily's been doing this, now this on the daily, right, doesn't look so bad, right? Hey, it's a nice green candle. But look at the 30-minute version. Here, BBC, basically up to the zone, back and forth, back and forth. Here's where it gets problematic, because you see, price traded below the BBC. We even got a bearish cross, but nothing happened. Price quickly reversed, went back to the top of the range. When you have that type of price behavior on your 30-minute chart, you just got to stay away from that. Okay. This pullback, this one, those, and this one, those, they all held. But then you come over here, this one didn't hold. And then this pullback didn't hold. And then this pullback didn't hold. That's when you know you've got a market with a problem. This market is problematic in this area. Okay. If we come up out of here, if we get a, remember we closed that gap, which was this high right here. So go back to the daily chart and take a look at that area. See, it's this low, this area here, that's creating the resistance. We fill the gap and stalled. Right as we closed the gap, we stalled. So really no obvious resistance, at least not the way I read the chart, until we get to this high. That's the only meaningful thing I see on the daily chart. Okay, so with that said, Dr. Tom will be here in a minute, so let's get through the recap. Well, I guess it'll be a little bit. Dr. Tom, if you're listening in, whenever you're ready, just let me know. Okay. On the ES, the Concierge Trade Alert was 33.33. If we get up there, that number's still good. 33. Okay. And then the short side was 33.07. Did visit that. So 33.07. So we triggered and we dropped not quite 2 points. Popped right back above it. Dropped again. This time we made it down to basically 3,300, 6.5 points, $50 a point, $300 per contract traded. We triggered once, triggered twice, headed the other direction, no trigger on the upside. And this little rectangle, again, that I drew, there's no real significance. The reason I didn't take the rectangle all the way up to the zone was simply because when I first drew it, I think this was the swing high. And all I've been doing is just grabbing it and just stretching it sideways. So you don't need to break out your slide rule and, you know, what's the exact, it's just an area. And once I'd already drawn it, maybe I drew it over here because, you know, I don't remember. It would be on yesterday's show or the day before. It doesn't matter because, again, it's an area. But these were all times where we saw price. This is a big red candle coming down. I mean, that certainly had to have looked like at one point that it wasn't going to hold a pullback. A big red candle from 33.21 down to 33.11. So that's a 10-point 30-minute candle. Everybody was probably saying, look out below. But what happened? It held. It holds more often than it doesn't. Pulls back again, holds again, pulls back again, holds again, and again. Now, going long into red and falling, not a good idea. If you're going to go long, having blue and climbing, having that wind at your back is what you want. When you're going short, you want red and falling, like we had here at 33.07. All right, let's look at the Dow. Last night's alert was to be long 27,130. Over here. It came out at 10 after, so 1800 hours. Right there. So this candle is when they came out. So buy 27,130. So 130. From 130 we made it up to 183. So that's a 53-point move. At $5 a point, it's $250 per contract traded. This one, basically, same thing, $300 per contract traded. And then this one, $250. It lines it right up with those highs right there. So, again, an area, right? But so far, good resistance. Now, after 26,900, the next weekly zone on the Dow is way up there, 27,670. Last night, the short side for the Dow was 26,930, and the swing low was 924. So that went 6 points. From 930 down to 924. Yep. 6 points. Price was headed for the zone. Typically when we get that close to a weekly zone, it's like a magnetic force, for lack of a better term. It's attracted to it, and then this is picture perfect consolidation at a weekly zone. 1, 2, 3, 4, 5, 6, 7 hours before it finally managed to take off. Only 3 things happen at a weekly trading zone. The most likely is that right there, consolidation. Second most likely is rejection. The third and least likely is the slice. As I come across one of those, I'll point them out to you. Don't see it on this chart. Now it looks like the Dow wants to trigger again right here at 27,130. You've got the support of blue and climbing. You just had a bullish cross. You're heading We're blue and rising, headed for that 50-yard line. So would this qualify as a good trigger? Yes, with a stop loss right about here. Trading's not easy, but it can be simple. Let's go to Russell. I haven't talked to him, Richard. I don't know. You asked me before a long time ago about Ed. I haven't heard a word from him. I really do need to find the phone that has his number in it and call him. Thanks for reminding me. Okay. Russell. All right, on the Russell. Long at 1547. That was the alert. $15.47, and we put in a swing high at 51.6. So 4 points at 50 bucks a point. That's $200 per contract traded. Got blue and climbing, and this really did it, almost all of it, in one 30-minute candle. Then we got back below. Here, this one kind of dicey. You're going, right at red and falling here. So the idea is, of course, we've got to get above red and falling. So if you're going to take this one, rather than entering at the trigger, wait for price to take out these swing highs. Of course, your stop loss is going to have to be below the BBC because price always reverts to the mean. Okay? So if you're on a very extended move like this, you can use the step line to help you manage the trade, stay in the trade for as long as possible. Here's an example here. If you want it to be long this move, but you wanted to take out these swing highs first and perhaps enter in this area here. The step line, as you can see, is on the left side of blue and climbing. It's got a lot of momentum on the way up. And then, see how these candles walk sideways? 3 of them, or the last 2 is what's really important. The last 2 closed green, but it was this movement sideways that walked the step line to the right side of blue and climbing. As soon as that happens, now you're on the alert for your exit signal. Okay, I had a great entry here. I waited for price to take out these highs. Everything was coming up roses. This could have been an exit signal here. If this red candle had closed below the step line, that would have qualified as the exit signal. The exit signal actually printed, well, you could say it printed up here. But that's a pretty close call, so this is probably more realistic. The closing price of this candle would be 15.46.5. Anytime you have a setup like this is suitable for framing. Got blue and climbing. The step line is definitely on the left side. Price takes out these swing highs. So you're long until the step line crosses over. And the market tells you this move may be over. Okay? All right. So that was the Russell. The short side was 15.29, which we haven't seen. in this session. NQ. NQ. Oh, see, NQ's taken off, so maybe that brings something to the other markets. Let's look at the S&P real quick. Now, back up to the top of the area. Okay, well that's fine. You got to start somewhere, right? So at least it's making an attempt. We need to take out this high, and this high, and this high. Now, the alert that's in the channel, and I think the CTA both, are at 33.33. Yeah, 33.33. So, if price takes out this trend line, then you're right at that high. I mean, these highs are so close together. It really, as opposed to a trend line, this might serve you better. Something like that. Okay, so it's taken off, headed for the zone, potential resistance overhead, and then along at 33.03. Okay, so back to the NQ. The long side for the NQ was 11,150. All right, 11,150, and we're at 66. So, 15 points at $20 a point. It's $300 per contract traded. So it's triggered once, got back below the trigger, triggered a second time. The S&P has a lot of influence on what happens here. So we'll see if the S&P stalls. It's a good chance, although the NQ has led to the upside these last few months. In fact, it's the greatest divergence between the NASDAQ and the S&P in many years. I quoted the statistic, I think, last week. All right, so the short side for the NQ is 1142, which is down here. We haven't touched that yet. Okay, crude. Here's crude. It's just hard to get excited about these markets, right? I know. Consider being long crude, 42.90. That hasn't happened yet in this session. Or consider being short, 41.05. That's way down here. Crude's rolling sideways with the indices. Gold. That was the highest weekly trading zone, 2071/72. This morning I issued 2 more zones overhead because it looks like gold wants to keep climbing. So I did some additional calculations, and the next zone up is going to be 2099. We're up there, 2099. And then there's one more up above that. Last night's alert for gold. Long 2059. Yes, it's true. Everyone had the opportunity to go long at 2059 last night. So, from 2059, well, we triggered once and made it up to 66, so $700. And then from 2059, same place. The zone would be the trade 2 target, so 59 to 71. 12 points. It's $1,200 per contract traded. When gold, the price of gold moves $1, that pays $100 if you're trading futures. Silver, when it moves $1, one futures contract is worth $5,000. So the alert last night for silver Okay, thanks, Ray. Ray was just sharing with me that the NQ just keeps hitting the high of the day. Yeah. Silver. The alert for silver was 27.39. And from 27.39, looks like we triggered once and made it up to 97, and then pull back to the BBC, which also took us below the trigger. That's always a nice combination right there. You see an alert, maybe you missed it the first time around or just chose not to take it because of the amount of risk required, whatever the case. When you catch these, and if you start looking for them, you'll spot them. Price comes back to touch the BBC and it just puts it, it doesn't have to be that small of an amount, it could be more, but it dips below the trigger, touches the BBC and bounces. See, this is just a textbook move. Leg, retrace, leg, retracement, another leg. So getting along here, you got red and sideways overhead, but as long as you understand that, all right, if I'm in at 28.08, I've got potential turbulence here at 28.21, and again here at 28.35. As long as you know these things ahead of time, if you know where the obstacles are, you know where the potholes in the road are, you can avoid them. Take your profit here, or just really tighten up your stop. Does it look like it wants to go higher? It looks like it wants to. And we're at the high of this candle. It looks like we're one tick off. So far, in this last 30 minutes, we've traded 6,000 silver contracts. Off the open this morning, 15,000. Okay. So from 28.50. 28.54 minus 27.39. It's about $1.15. So it's a little over $5,000. And of course, no trigger on the short side. Okay, it's top of the hour. Let me see if I see Dr. Tom in the audience. Okay, I don't see him yet. Okay. All right, anybody have any questions about anything at all? Michael mentioned workshop tonight. So if you are partner, passport holder, 9 p.m. Eastern, bring your questions. You can also send questions ahead of time. You can send them via email in case we need to drag up a chart to explain it or something of that nature. Otherwise, you can ask your questions live in real time during the meeting. Now, if you're on the trial, you get everything we have except the Thursday night workshop. You got the indicators, you got the platform, you got both the alerts, you got the live training class, 2 hours a day for 5 days. So that you can make an intelligent, well-informed decision if what we do is right for you. Well, let's begin on the ES. Okay, at resistance, at the zone. If we don't manage to put in a higher high here, then We've got a high, a lower high, another lower high, and then if this also becomes a lower high. Ray asks, runs can happen at midnight, wee morning hours, and of course 9 to 5. Is there a best or prime time to be trading? You know, Ray, moves can come out of anywhere at any time. Usually the London Open has pretty good trading. You know, these last few weeks and months, with the exception of the last few days, the markets have had movement around the clock. So usually about 3 a.m. Eastern, the market picks up and there's something moving right on up until the Wall Street Open. And then Wall Street calms down, you know, around noon. And then some afternoons get busy, but most, I would say, well, a lot of them don't. So if you're looking for prime time, I guess that would be 3 a.m. Eastern to 12 noon Eastern. So that's a big stretch, but, you know, just pick a slot because on any given day, you'll find something going on there. Brad says, they fix the open and closing prices for gold and silver daily. What do you know about the importance of those prices? You know, Brad, we've laughed and joked about it a number of times here on the show. Dr. Tom, when he shows up, he could probably give us a intelligent answer. But I always thought it was weird that they call it fixing the price as if they're up to some dastardly scheme. But it's part of the British language or something. It doesn't, like when they have a business plan or an idea, and somebody from across the pond, correct me if I'm wrong, they call it a scheme. Here in America, a scheme has a negative connotation, but over there, not at all. And so I think fixing the price, there he is, the one and only Dr. Tom. Dr. Tom, I'm going to open up your mic. You have an open mic. Welcome to the show. No, for real. Take two, Dr. Tom. You mad? Are you? Hey, Dr. Tom, we can't hear you. I don't know if you want to call me or text me. See if I can send you a message. Your mic is open. We can't hear you. Can you guys hear him? Because the other day I couldn't hear Michael. There you are.
No,
I hear you
I'm not
scratching
getting
around.
anything.
Oh no, that's Valerie. Hi, Valerie.
Test, test, test.
Oh, there's Dr. Tom.
For some reason, it's not saying this.
We can hear you now.
Okay, good. I had to switch to my radio microphone.
Ah, well, that's because you're on the radio.
Hey, on the radio,
Yeah.
radio. Yes, sir. Okay.
Well, welcome to the show.
Actually, I like this one better because it's blue, and blue is my favorite color.
Isn't?
Yep. So,
Well-
how you doing today, brother?
Well, pretty good. I mean, this market, what you're looking at up here, this abstract Picasso-looking thing, we've been stuck in this range for 2 days now, and just when you see this swing high right here on this 30-minute chart.
Right.
That was the fulfilling of a prophecy from back in February. It was a Sunday night, February the 24th. We gapped lower on the open. This is the daily chart we're looking at right here.
Right.
You see it?
I do.
And when price did this right here, ding ding, it closed that gap. That gap. is now closed.
Okay.
Boom. So anyway, fun things to know and tell.
Yes,
Want me
sir.
to send you the charts?
Yeah. I know something that's not range bound.
No, gold has been, gold and silver both have been on quite the streak this week. We've been following it every step of the way.
Yeah, not just this week. I mean,
Wow. Silver's doubled since
Just-
April.
yeah. But especially, the last few weeks. I was actually on the phone with a client. And as we were talking, over a 5-minute conversation, gold moved 8 points and it broke through 2,000.
Mm-hmm.
Now, 2 weeks before that, I had done a webinar and I had James Brown up on the screen, and he was saying, "I feel good."
Yeah, you showed us that set of slides here about 2 weeks ago.
Okay. Well, as soon as gold passed through 2,000, I was getting all these texts from friends and clients and people who read my articles and so on, and they texted me, "I feel good," 2,000 in 2 weeks. So it's pretty wild, but we're having fun over here.
I bet you are. I bet you are.
So the title today is "Gold's Amazing Run Has Just Begun." I am not the expert on commodities that Dwayne is, but
Oh, that might be a stretch. Expert, I don't know.
well, an expert is actually a drip under pressure, so it's not that big a deal.
Okay. All right.
It's spurting out, right? No, but seriously, the thing you have to remember with gold is it is not a commodity. It's money. So it doesn't trade like commodities or stocks or other indices. You always have to keep in the back of your mind when you're making decisions about gold is that it's actual real money, and more people are realizing it. Why have we had this huge move? Why? Well, it's new money flowing in for first-time investors. This happened, after they call it the global financial crisis. I call it the panic of 2008. But following that, gold peaked out to $1,920 just briefly. It was an intraday high in 2011. I think it was September 5th or 6th. So I believe that gold's 50% move from its hindsight bottom of 1,050. Again, it didn't stay there very long because that's below the cost of production. In late 2015 to 1,600 pre-China virus has been driven by three things. Institutional smart money. Not all institutional buyers are smart, but the smart money has been flowing into gold, and so that's been huge. Central banks have been accumulating it like crazy. People always say to me, "Well, shouldn't I buy silver because it's cheaper?" Well, is it? It's cheaper by the ounce, but which is cheaper, $5,000 worth of silver or $5,000 worth of gold? It's like saying, is a $100 bill cheaper?
A pound of rocks or a pound of feathers? Right. Yeah.
Right. One way I explain it is, which is cheaper, 100 singles, which would be your silver, or $100 bill? It's just that gold is much easier to hide and protect, because if the dollar crashes, I say if, it's almost a definite now, then you're going to want to be able to keep your net worth hidden, and gold's a lot easier. The other thing is central banks only buy gold. Every single central bank in the world has gold, and I've never known of any that have silver. I check every once in a while, and again, bulkier, heavier, and so on. And then the third big driver has been existing holders of precious metals that are increasing their proportion. I think I mentioned a couple of weeks ago that 2% of the people in the country at the end of last year owned physical gold. We're not talking about paper gold like ETFs or whatever, but physical gold. So that put Dwayne and myself and a lot of you on this call into a very elite category, the 2% of American Gold Club. But 3 months into this craziness, and they did a survey in 12% of Americans, or a 600% increase on gold. Well, now it's right at 20%, so 1,000% increase. So some of that's brand new money coming in, but a lot of it's people that already knew the value of precious metals and they bought more. Now, yes, the China virus is having an effect. And it's been a trigger to move two groups of people, of new buyers, those who are already considering buying gold. I've had several people tell me, one lady said, the Lord's been telling me to buy gold ever since January. And I felt like saying to her, well, why didn't you? You know, she bought it. You know, you just have to say woulda, shoulda, coulda, and move on, because you're not going to buy gold cheaper than this. It's not going to retrace. Then there's people who have concerns about the stock markets, well-founded concerns, and the low interest rates, but until this, they hadn't looked at gold. So both of those are kind of like fear buyers, and I don't think that's appropriate. I tell my clients, don't buy gold out of fear, because the Bible says God has not given us a spirit of fear, but a power and a love and a sound mind. And we know what the sound mind is, don't we, Dwayne?
We do.
It's the mind of Christ.
That's right.
So here's gold in ounces, 4 months. So from around 1,500 to well north of 2,000. I didn't check just before we came on, but it was up at almost 2,070 at one point today.
December futures are at 2,070. I'll check the spot price.
Okay, thank you.
You're talking.
So that's what gold looks like. What I like is that it's not a climax run.
2,059 at the moment.
2,059, thanks. And I believe it was up $50 yesterday. In the last 2 weekends, it's gapped up. Gold doesn't gap. It just closes at one price and opens at another price, except very rarely.
Oh, yeah, we had a question earlier before you came on about how they fixed the price of gold and how we joked about that. Can you explain to the audience
I heard about that.
What that means?
Well, you know, every morning a bunch of old guys in London get together and they decide on the price of gold. That's actually going away. It's becoming more market-based now. But it's a tradition, and so they still do the gold fix, and they'll probably do it till they die. But it means less and less. Because, like, for instance, one of the gaps in gold was 23 points, all right? Mm-hmm. Never in my life have I seen gold gap 23 points. It was wild when I saw it. The other weekend, I don't remember how much it gapped, but it was, I think, 10 points, something like that. So the price fix doesn't really have a lot to do with that. But it is interesting history, you know.
Right. Yes.
So
okay.
Why would Bank of America, go ahead.
No, I was just going to say that was just, hopefully that satisfied the curiosity of whoever asked the question. I had said when they say fixing the price of gold in the United States, that term has sort of a negative connotation. Just like
Right.
scheme has a negative connotation in the U.S., but if you're in the U.K. and you have a business plan, they call that a scheme, and it has no negative connotation at all. It's a plan. It's an idea.
I know. I don't understand why the English can't learn to speak English. you know.
Yeah, I don't know. We'll
It's
give them
tough.
a break.
So I mentioned before that Bank of America is predicting gold to go to $3,000. And I didn't have the actual article last time, so I've got it now. But, you know, why would they do this? Why would they recommend something they can't make money on? And particularly, why would they increase their target, as you see on the screen there, from $2,000 to $3,000 an ounce? I think it's a magnificent PR move on their part, because when gold goes to 32 or 3,300, you're going to see advertisements out there saying, see, we recommended gold and look what happened. See, we said a gold above $3,000 and now it's 33. And, oh, by the way, move your account from Wells Fargo over to us, because Bank of America is number 2 right now. Chase will probably always be number 1, but Wells Fargo and Bank of America are always fighting over being number 2. So even though they won't make money on it, I think they're going to make, they've got a lot of great publicity out of it. But I went back to their actual white paper. It's like a 24-page PDF, and I pulled a few quotes out of it that I thought were interesting. They called it the Fed can't print gold. So what does that mean? Well, before 1933, if the government printed money, it had to be backed by gold. Actually, before 1913, they passed the Federal Reserve Act, and they started printing Federal Reserve notes. But we still had gold notes in circulation. So any of those had to be backed by gold. The Federal Reserve backed notes are only backed by a debt. So after they confiscated all the gold in 1933, it was only Federal Reserve notes, and presidents loved it. Congress loved it, because they could print as much money as they wanted to with no oversight. And so the Fed has been printing so much money that right now we only have enough gold to back 4% if we decide to go back on a gold standard, which by my calculations means that gold would have to go to $42,500. Other people are saying $50,000 to $80,000 per ounce. But they made the point here that the Fed can't print gold. Only God can. You know,
that's a fact.
Remember when I talked about the fact, or the title, "The Only Money God Ever Made"? Well, He gave us silver and gold, like it says in the Old Testament, and it says the silver and gold are mine, says the Lord. So He gave us real money, and the government gave us monopoly money. Now, Bank of America is already pretty bullish, way back a year and a half ago. I think they first made their projection of $2,000. But boy, we've blown past $2,000 like it wasn't even there. And I believe the reason is that, as I talked about last week, once it broke through its all-time high, its all-time intraday high above 1900, but more important, its all-time closing high of 1885. It blew through that and closed decisively above it at 1907. Mm-hmm. So it wasn't just a peaking up through the closing high, it was a solid close. So the report says that the vast amount of monetary stimulus, they call it, I call it what it is, making counterfeit money, unleashed by central banks globally. Right. It's not just us, it's global. And they said that financial repression is back on an extraordinary scale. Well, what does financial repression mean? If anybody has an idea what it means, I'd love to hear their answer, but I'll tell you what it means. It's governments making money off of us with hidden taxes. Inflation is a hidden tax. Throughout history, any government that has taxed its people more than 50% has faced armed rebellion and has eventually succumbed to that rebellion. So,
well, at one time the U.S. had income tax rates as high as 90%. However, no one ever paid 90% because the person who had enough money to qualify to pay that rate had enough money to hire very smart accountants to figure out ways that they didn't have to pay anywhere near that. So I just read an article on that this morning.
Forward it to me. I'd love to read it.
Okay.
Yeah, but that's true, and that happened under FDR. When Reagan took office, it was 70%, and he took the top tax rate down to 28. Bless his heart. So as economic output contracts sharply, fiscal outlay surge, and central banks bank balance sheets double, fiat currency can come under pressure. Investors will aim for gold. That's a lot of fancy talk, basically to say that as the money becomes worth less and less, the central banks, in order to have proper reserves, are going to have more gold, and they're buying it. So Bank of America called gold the ultimate store of value, and they're not the first ones to call it that. Okay. Central banks are creating trillions of dollars out of thin air. In just March, only 7 countries, the G7 countries, their central banks bought up 1.4 trillion in assets. That's just in 1 month. Assets are mostly debt. Okay. So they're socializing risk. They're taking huge risks, the governments are, and they're making it acceptable to regular people. As a nation, we used to be savers. I mean, the savings rate used to be pretty positive in this country. But as people see the government borrowing more and more money and never having to pay it back, they start doing the same thing. So now we have a negative savings rate in this country. It's crazy. So
it's one of the worst in the world, I think. For developed nations.
I think Japan is the second worst. So back in March, Peter Schiff, who's almost always right, predicted a gold rush, saying the dollar is cooked. He said that with the central bank and government response to the China virus, I refuse to say the other word there, hyperinflation has gone from being the worst case scenario to being the most likely scenario. Now think about that for a second. Every nation in the world that I've found at some point, either in history or in modern times, has suffered hyperinflation. We've had hyperinflation in this country twice. One time, it was runaway hyperinflation, like they had in Germany. That's where the money just loses 100% of value every day or more. And then a regular hyperinflation under Jimmy Carter, where we were buying CDs at 18% and mortgages for 16%. And everybody thought, wow, but inflation was 22%. So hyperinflation is not a good thing. But he says here that because of all the stuff that's happening, instead of hyperinflation becoming the worst case scenario, and we can, try to do something to head it off, he's saying now it's the most likely scenario. And if that comes to pass, gold will go through the stratosphere. He's calling for gold at $5,000. And he's been one of the most accurate people on gold prediction in the last 40 years that I've been watching it. This is Peter on Fox Business News. What the Federal Reserve has basically told us is that if you own U.S. Treasury bonds, you need to sell them to us because we're going to buy the entire bond market. That's what the Fed's doing. They're just buying up all the bonds.
Yeah, they're the only ones that show up anymore, I think.
Yeah. So he says that investors will eventually start dumping dollars. Think about this. China owns more than a quarter of our foreign held debt. So they own more than all the other 200 countries, because almost every country's central bank owns dollars. If China were to dump their dollars, their debt, and just sell them at whatever price they could get, they would get hurt financially, but it would crush the United States. So he says nobody holds dollars. Nobody can hold bonds denominated in dollars. This is now like the game of musical chairs, where nobody wants to get caught with dollars when the music stops playing. We did a webinar about that one time. We had a picture of musical chairs going on. And basically, I call the dollar now faith money. It's only money because people have faith that somebody will give them something for it. But as you see, if you have a $20 bill, what you can buy with it is becoming less and less and less. I found a great graphic, I should have put it in here, of what you could buy for $20 at a grocery store.
Right.
And like 25 years ago, you fill up a shopping cart for $25. And today, you can barely cover the bottom of the shopping cart. So when that happens, what will they buy? Gold. He says, what else are they going to do? I mean, what are they going to use as an asset? They're not going to just swap dollars for euros or swap euro dollars for yen. They're just going to buy gold. Remember when people used to buy dollars when they were worried about stuff, Dwayne?
Mm-hmm. Yep.
If they were in Europe, they would use the euros and buy dollars, and it was like a safe haven currency. No mas. No more. Okay. Now this is just a quote I pulled, but we're going back to August 22nd of 2011. They say 1880. I actually saw it printed 1885. But the most important thing is, whether it's 1880 or 1885, it closed above the closing high decisively, and the date that it did that, it closed at 1907. So that was a big move. Bank of America expects gold to average $16.95 this year. Boy, were they low. In 2021. Down at the bottom there, just that quote from the report. Beyond the traditional gold supply and demand fundamentals, financial repression is back on an extraordinary scale. Now, I didn't finish explaining that, but basically, financial suppression is where the government steals money from us. One way they do that is a lot of central banks now have gone to negative interest rates. So instead, they can even call it an interest rate. It's a fee, right?
Right.
Here we still get a little tiny bit, maybe 0.25% on a savings account, and if you're fortunate, 1% on a CD. But in Europe, a lot of countries have already gone to negative interest rates, where you actually pay the bank for keeping your money, quote, safe, unquote. Well, if it's in the bank, buddy, it's not safe. If it's in the bank of gold, it is. But I mean, we've seen banks fail throughout history, and we've seen banks fail in this century, lots of them. We've seen insurance companies fail. So please don't think that just because somebody says, well, I guarantee you this amount of interest on this annuity, that it's really guaranteed, because the guarantee is only as good as the company. And if the company can go to business, which many companies did in the last crash, then the guarantee is worthless. Here's a 300-point move just in 1 month. That just blew me away. And, that gives rise to the question, is this a sprint or a marathon? Is just a short-term rush, or is it going to hold on for a long time? Mm-hmm. Well, I mentioned that you don't see gold in a climax run. If you see gold going almost straight up, that's what William O'Neill calls it, and he's one of the best chart guys I've ever come across.
Yeah, it's the same thing I would call parabolic. Yeah.
Okay, and what happens after a parabolic move?
Well, it's usually not very pretty.
Yeah, it drops like a rock, right?
Yeah, it sure does.
So if gold was going up like that, I wouldn't be so bullish. But look at it. We'll look at it in several different time frames. Here's a 1 month. Here's 3 months. Okay, nothing parabolic about that. And here's 50 years. I want to put this up because people always want to bring up the fact that in 1980, gold peaked and then it dropped a lot. And so let me just explain to you what was happening back then. In 1980, the Hunt brothers were manipulating the silver market. There was more contracts on silver by far than there was silver in the world. And so they kept going along silver. Usually silver follows gold. When gold goes up, silver goes up, but not as much. And when gold goes down, silver goes down, but more. But in this case, Silver was what was being manipulated, and so gold was following silver, and it got up to 850, something like that. I had bought it way back at $200 as a very young man, and I bought $250,000 worth of it. And so when it hit above $1,800, I said, okay, let's not be greedy. And I sold at 800, and I'm disappointed the next day when it keeps going up, and then it turned around. Okay, so all of a sudden, I've gone from just being a young kid with $250,000 to being a millionaire. But I didn't realize at the time, it was only after I retired from the brokerage business and started studying inflation, which brought me into being a gold guy, that the only reason that it went up that much was because the dollar had gone down that much. Okay.
Right.
So, and again, the false market movement generated by the Hunt brothers. So it dropped quite a bit, and then it went sideways for a long time, and then we had this big run up to around the $1,900 point. At that point, the central banks, just to understand what's happening here historically, the central banks were looking bad, because when gold goes up, it makes their currency look bad. It makes it look like the government's not handling its money right. What a concept, right?
Right. Yeah.
People say, Tom, you sound like you're anti-government. I said, no, not at all. I'm a patriot. I love this country. I volunteered for the Marine Corps. I didn't get drafted. And I'm not even anti-government. But I'm definitely anti-stupid government, which is what we seem to be having a whole lot of. All right. Anyway, that drop you see there to the right was caused by central banks dumping gold, because they wanted to drive the price of gold down so that their money would look better. One guy who did that was the Chancellor of the Exchequer in England, a guy named Gordon Brown.
What was his title?
The Chancellor of the Exchequer.
Okay.
England likes to have fancy titles. I'll give them that. They know how to use big words. I mean, if you want to use a big word around me, use a word like mountain or elephant or something. But Chancellor of the Exchequer. Anyway, he didn't just sell some of his gold like most of the central banks did. He said, gold is just like it takes up a lot of storage, and it's just a hassle. So he sold all of England's gold, all of it. Crazy. And of course, when they had to buy it back, and that's where you see when gold bottoms out there around the $1,100 mark and the central banks start buying again, he had to pay billions and billions of dollars more to get back the same gold that he sold. The other central banks, sold at a high price and then bought back low, but he sold everything and basically hurt the British economy tremendously, because by the time they made the decision to buy the gold back, it was higher than where he'd sold it. And so what did they do? Instead of firing him a few years later, they elected him prime minister. Just shows how smart government is. Okay, so that brings us to, prime minister, the top dog in the country, the stupidest man in the country. And by the way, that could happen in November if we're not careful, folks. We could elect the stupidest man in the country if we don't pray and get out there and work. I mean, if you've never gone to work and tried to help someone get elected, now's the time to do it. I'm not telling you who to work for. I would just say, don't vote for the stupid guy, vote for the smart guy. Okay, so now here we are in real time at a very, very nice level. Now, people always say to me, well, Dr. Tom, my philosophy is to buy low and sell high. They usually stock people.
Right.
And I'll say, well, how's it been working out for you? Well, I lost money this year. I said, well, how about last year? You're a little quieter now. Well, yeah, I lost money last year too. Well, how about the year before that? They're now practically whispering, yeah, I lost money. Trying to buy at the bottom is like trying to catch a falling knife. People say, well, this has got to be the bottom. We've been watching it go down and down. This has got to be. Market doesn't care what you think.
Market can always stay liquid longer than you can.
Yeah. So my philosophy, and it's helped me make millions of dollars for clients and for myself, thank the Lord, is to buy high and sell higher. Because by definition, when you buy at the low, even if it actually is the low, you're buying it as it's trending down. And if you're buying it when it's trending up, you've got every opportunity to make a lot of money. So people say, well, I can't buy gold now. It's over 2,000. Well, it's going to go over 3,000. It's going to go over 5,000. And if we have a crash, it's going to go to at least 20,000. So don't worry about what could have been. I've got a new saying now. I really like this one, Dwayne. There's a reason why your windshield is bigger than your rearview mirror. Okay.
Okay.
You can use that if you like.
Okay.
Everybody worries about, oh, I should have bought it, back,
Yeah, right.
but it was this price or that. Don't worry about it. Just look at now. Is it a good buy now? And if it's not, then don't buy it. But I think I'll show you where it is a real good buy.
The only way our government has to solve the current economic crisis is to print more money. Because we know they're not going to take the hardline approach, which says, we're going to let the market sort itself out and we're not going to print any money. That's not going to happen. Whoever's in power, money will be printed. And the more money that's printed, it's worth less each time they roll the press. And they don't roll too many presses these days. It's all done with a few keystrokes. Move a few commas.
Some nerd in the back room somewhere is making our money now.
So if there truly is an inverse relationship between gold and the dollar, and when I take the screens back later, I'll put up a chart that shows both gold and the dollar. And so if we know for certain that our dollar is going to become worth less and less and less because our government is going to have to print to salvage our country because of the predicament that we've somehow found ourselves in, then what Dr. Tom is saying about gold, if there is that true historic inverse relationship, then it's not too hard to picture gold finding its way to 3,000, 5,000, 10,000 or more.
Yeah. A lot of smart guys are calling for 10,000, but I'm happy with 5,000 because I've got the great majority of my net worth in precious metals, more than I should. I mean, technically, you shouldn't have more than 50% of your assets in anything, but most of us find something that we really like, and we end up loading up on it. Okay, I just want to mention platinum here briefly because I've been watching it lately. Matter of fact, when my clients call to buy gold bullion, I've been suggesting platinum because it's at a 120-year low against gold right now. And right now, platinum's going up percentage-wise more than gold. I saw one day where, a couple of days ago, where both gold and platinum at that moment were up exactly $23. Well, platinum and gold used to run right together with each other. But today, platinum's half the price of gold. So for them to be up the same number of points meant that the platinum was up twice as much as gold that day. And I don't know if we want to get into the whole thing with the catalytic converters and all that, but just real briefly, when they started using gold for catalytic converters, it was $200 an ounce. And its main use before that was in jewelry. Only gold and silver have ever been used as money. So when I'm looking at precious metals, I look at basically three things. It's monetary use, it's decorative use, jewelry or vases or whatever, and it's industrial use. Well, only silver and gold check off all three of those boxes, and platinum checks off two of them, but it's never been used as money, so I kind of stayed away from it. Palladium and rhodium and the other precious metals, strictly industrial. So when it was getting really hard to buy gold bullion, I took a look at platinum. I said, man, for most of the last 120 years, platinum is just sitting riding on top of gold, just a little bit above it, occasionally dip below it. But then they decided, man, we're paying too much money for platinum for these catalytic converters. They found out palladium was almost the same molecular structure. So with a little bit of retooling, they could buy palladium, which was around $250 at the time, and save a lot of money. When they did, platinum dropped naturally. Well, now palladium is, I think the last time I saw it was way above gold and far, far above platinum. And so now a lot of them are either going back to platinum, or the smart ones are leaving half of their capability with platinum and half with gold, or with palladium, and then they'll swap back and forth depending on whichever's cheaper. The bottom line is platinum is going to go back up there and hang out with gold again. And it's a great opportunity right now. I mean, you can buy it really cheap. Okay. Here's the December contract. You may have a more up-to-date number than I do.
Are you talking about for gold?
Yeah.
Well, the current price right now for the December contract is, let me bring it up. It is 2070.
2070. Okay, so higher than the current price of gold. It seems to have been staying there. The other thing I found interesting.
Now check the spot price on gold right now is 2057.
Okay, so the two really interesting things I've seen about gold are those two big gaps, and I'll be interested to see how it works out this weekend. But a 23-point gap, gold just doesn't gap. It at least in the spot price, it's always the same or within $1 or $2. And the other thing is that intraday, gold always trades at $1 bid-ask spread, and it's been hanging out at a $2.50 bid-ask spread. And today I saw platinum for a while at almost an $8 spread. So precious metals are getting more and more interesting. Now here's gold versus the market. Going back to July of 08, so that's 10-year chart. And the bottom two lines are the S&P and the Dow. And you can see for several years, gold wasn't performing well, so it was staying right around where the stock market was. But now it's just smoking it. So the green line is the Dow, and the yellow line above it is the S&P 500. So here's a chart just this year. So it's the first of the year of gold versus stocks. And again, the chart speaks. Now this is an interesting one. They're calling the purple area there alternatives, but most of the alternatives, including gold, yeah.
What are the other alternative investments?
Well, there's IPOs and just non-traditional assets. Okay. But when you read the article, it's actually mostly gold. Now, it's not all gold, because if you see off to the right, in 2019, it's 23%. That's not where it was. And by the way, these are not people holding physical gold, but just people. You see it going from 7% alternatives to 23%. So people are becoming less and less enamored of equities. You see them going from 60% down to 45%, and 61 down to 45. And the percentage holding bonds remains fairly steady, which means people buy bonds out of fear as well. The only thing is you never make money with bonds. Typical bond portfolio makes 3%. Typical inflation is 5%. So you're losing 2% a year. So I just found it interesting. These are people that hold all kinds of alternatives, including like gold certificates and gold ETFs, things that are supposed to represent gold. Okay.
Yeah, don't fall for it. folks. That paper gold, it's okay for trading purposes, in and out, a couple days, couple weeks, maybe a couple months. But if you're buying gold as an investment because you want to own physical gold, if you can't hold it, you don't own it, and that's just no. But I got this paper here. I own this many shares in GLD. Okay.
Right.
You own this many pieces of paper that represent, the valuation of gold, but you still don't own any gold. You just own a piece of paper. There's a big difference. I think it should be criminal that they aren't required to disclaim that a lot more clearly to people than they do. GLD and SLV, we showed the documents one day here on the show. It's buried in the middle, in the fine print, in the legalese, where it says that, guess what? You don't really own any gold. We're not required to buy gold with your money. It's right there. You got to know where to look. So I think it's wrong. I think it's wrong that people aren't at least aware, because I bet you if every potential buyer of shares in GLD and SLV, if they were told, okay, now this doesn't mean you actually own gold. This is just like a proxy. It's pretend like. I bet you 50% of the people that buy shares in GLD and SLV would not buy shares. Instead, they would turn around and go buy real gold or real silver, and that would drive the price up tremendously.
Do you know the percentage, Dwayne, on GLD because they own some bullion?
They do, but the disclosure document, the one that I showed on the show here that day, said that they are not required to own any gold. So they may have some. It probably makes them look good, but in the disclaimer, it says that they don't have to own any. They're not required to use your money or any percentage of your money and go out and purchase bullion. That's not how it works.
Yeah, it's basically artfully contrived derivatives, and you and I are probably the only two people in the world that have ever read the whole documentation on it, because nobody knows this. They think that they actually
once
have
I
bullion.
found what I was looking for, I'll be honest, I stopped because it was pretty boring. And I think it's kind of designed that way,
Well, hiding it in the middle, that's smart, It's just like when they announce bad news, they try to do it on a Friday night when nobody's paying attention. Like I was predicting since about February that we would have negative 30% GDP growth in the second quarter. And what did it turn out to be? 32%, something like that.
I don't remember.
It's worse than the lowest in the Great Depression. So that was 29%. So it has to be at least 30%.
So what you're looking for is the recent GDP number?
Yeah. And by the way, they normally publish that 7 to 10 days after the end of the quarter. You know when they published it? One day before the end of July.
July 30th of 2020. Current dollar GDP decreased 34.3%, or 2.15 trillion, in the second quarter to a level of 19.41 trillion.
So the first quarter was much worse because they announced
and the first quarter GDP decreased 3.4%. So it was down 3.4% in the first quarter. The second quarter was 34.3. So that's a pretty hefty jump.
That is. It's the worst the United States has ever seen. And it's such a shame because it's all political. It's people trying to get their guy elected that are causing all this pain and suffering. I don't even want to get into the virus thing, but there's so many lies being told.
Yeah.
Okay, this is from the World Gold Organization, and it's part of their market update. They're saying gold market supply chain shows resilience amid disruption. And I've described the fact that most of the major mines are shut down. but some of the smaller mines are stepping up and producing more now. Even some of the mines that were shut down originally. But the biggest ones, there's one in South Africa, they laid off 450,000 people. It's going to take a long, long time to get that back into production. Then 3 largest refineries in the world, important part of the chain, are closed and still closed. They're in Switzerland, but there's some smaller refineries producing some refined gold. And the mints, you know, a lot of the biggest ones shut down and then reopened up at minimal capacity because you know, they had to spread the machines out and put up plastic barriers and wrap everybody in bubble wrap and spray them with hand sanitizer before they go to work. So the fact that there's not a whole lot of gold coming out of the refineries is okay because they're producing about all they can. And the Canadian Mint has gone from producing about 70 different products to only producing 2, which is the gold maple leaf and the silver maple leaf. They're two most popular things. So the shortage of gold still exists. The shortage of silver, same thing. But you can still get it. And by the way, my telephone number is 561-753-5998, 561-753-5998. Tell them Dwayne sent you. And if you want to, I'm sorry?
I was just laughing. I said, that's me.
Yeah, Dr. Dwayne, the Doctor of Futures. And you can also go to CFRNgold.com and fill out a form there, and we'll send you information by email, and we'll also send you invitations to our webinars. So anyway, the supply chain has been busted. The demand has been up dramatically, but they're saying it's showing resilience. So it's starting to come back to some kind of normalcy. Until November 4th, when the coronavirus thing will end, then we're still going to see shortages. Okay, and then this one I didn't actually make a slide for, but there's some of the best analysts saying gold is going as high as 10,000. I saw one that was pretty funny. It was just towards the end of last year. Some guy saying, well, I think gold's going to 2,000, like that was something special. Well, I mean, we've known that for a year and a half. You see all the millionaires selling stocks and buying gold. What else could it mean? You know? So, love to talk to you personally if you have anything you want to discuss with me. If you are interested in getting the Gold Education Starter Package, it's basically a well-designed group of videos and articles that will help you understand, number one, the difference between bullion and investment-grade gold, because bullion, you know, we have bullion. I don't have any dog in this hunt. You know, if you want bullion, I'll ship you bullion. But if you want to make money, you'll buy investment-grade gold because it's far, far more profitable because of its rarity.
See this chart I have up?
Yes.
This is gold monthly. This is the dollar monthly.
Boom.
Now,
Yeah.
put it on a weekly. That's weekly.
Yeah, you see the spike in gold there and the dollar dropping.
Now here comes daily. So this was September of 2018. Here's 2019. We started to take off June, really. We took out this resistance, that would have been June of 2019. And we've not crossed back below this area right here.
Look at the percentages there. Gold up 71% and the dollar down 8.5%. Now, it's not always as obvious as this, where you see gold moving counter to the dollar. Sometimes they'll move in tandem, and same thing with stocks.
Those times are pretty pretty short-lived. Just from looking at this chart, I mean, look at this steep decline here, and look at this steep rally in the dollar.
Yep.
Almost
so
lockstep. Yeah.
If you just keep in mind, whether you're buying futures or whether you're buying physical gold or whatever, keep in mind that gold, even though they trade it as a commodity, even though they put it in the commodities index, if you take gold out of the commodities index, call it commodities X gold, and actually gold to silver, and then look at a chart of those two side by side, you'll see them moving counter to each other more often than they move together. So why they want to put money in the same index as pork bellies, I just don't know. But if you keep that in mind, that this is money, it's the only money for the last 6,000 years of man's history. It's been the only money in this country until we decided to go to monopoly money in 1933. So if you want to protect your assets, or to protect your family, your church, your ministry, or your business, I'm seeing more and more businesses taking business assets, if you're sitting in savings, and putting them into gold. Because why have, businesses have to keep reserves. If you have $50,000 in reserves, why keep it at a bank where it's losing money to inflation? Why not put it in the bank of gold where it's going to make money on inflation? So I'll shut up.
Thank you so much, Dr.
God bless everybody.
God bless you, brother.
Thank you. Appreciate you having me on.
Thank you.
Lord
We
bless
always
you.
enjoy it. Always look forward to it.
Me too. God bless.
All right, take care. Okay, guys. We covered the S&P, the Dow, the Russell, the NQ, crude, gold. We looked at everything. Covered all of the Concierge Trade Alerts. And look where we are. That little trend line. This is all just one big area. There's no precision here. It's sloppy, sticky, quicksand, whatever you want to call it. Our entry is up at 33.33 on the long side, and we had a CTA down here at 33.07, which was good for a move down to, it's about 6.5 points. As long as the S&P just continues to roll sideways like this, it's best left alone. And as long as the S&P is doing this, it's going to have this kind of an effect on crude. Potentially, we see some more upside today on gold. High of the session. All-time historic high. 2081.80. Well, that's for the December contract. Spot gold. Is right here. 2056. Okay. Good word for the day. Last 2 days we talked about how to deal with difficult people. Why stop a good thing? 1 Peter 2:23. He did not retaliate. He did not retaliate when he was insulted, nor threaten revenge when he suffered. He left his case in the hands of God who always judges fairly. 1 Peter 2:23. No one mastered the art of dealing with difficult people better than Jesus. Herod ridiculed him. Pilate washed his hands of him. The religious leaders tried to trap him. His family, well, they thought he'd lost his mind. His townspeople wanted to stone him. Thomas doubted him. Peter denied him. Judas betrayed him. Soldiers beat him. The crowd shouted for his crucifixion, and his closest followers ran out on him. Yet Jesus never prayed for God to remove the difficult people from his life. If he had, there would have been nobody left. Sometimes even prayer can be misused as a way of avoidance. Sometimes we ask God to remove a difficult person from our life because we're not willing to confront that person honestly. And if God answered that prayer the way we wanted, we'd lose the opportunity for growth that is his great desire for us. He said, I come to give you life, life more abundant. Jesus' teachings about dealing with difficult people flowed out of the deep, intimate, painful experiences and wisdom, and they've influenced world leaders and movements like no other words that have ever been spoken. Not the words of Gandhi, not the words of Dr. King, not even the words of Nelson Mandela. Not Buddha, not Confucius, no one. No one else ever split time. Peter writes in 1 Peter 2:20, if you suffer for doing good and endure it patiently, God is pleased with you. For God called you to do good, even if it means suffering, just as Christ suffered for you. He is your example, and you must follow his steps. He did not retaliate when he was insulted, nor threaten revenge when he suffered. He left his case in the hands of God, who always judges fairly. And you and I, we're called to follow in his example. Yes, the bumper sticker. We're called to do what Jesus did. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell. Well, you know what? That other computer's still rebooting. Ha! Let you know a little secret. Those of you that used GoToWebinar to log in today, I don't think you heard the intro play because that computer was offline at the time. But those listening via YouTube did hear it because I listened to the stream myself. So, with that said, I will not be playing the normal outro. Information, the one that says information discussed on this radio program is not a solicitation to buy or sell any security. Always check with a licensed investment professional before making any investment decision. And that's it. That's a wrap. If you're partner or passport holder, I'll see you tonight in the workshop. If you're on the trial and you're ready to become a part of the family, call Valerie, 949-42-EMINI, or send an email to support@cfrn.net. Just let her know you're ready. She'll take care of everything. You'll be in the workshop with us tonight. Thanks for tuning in. See you tomorrow.